Welcome to today's market report.
European shares closed at a record high on Wednesday, despite caution ahead of the US Federal Reserve meeting that could see it outline plans to start stimulus unwinding. The Pan-European Stock 600 was up 0.2% to a record high of 459.86 points, marking its longest gaining streak in 3.5 years, with a ninth straight positive session. Travel and leisure, utilities and chemical stocks were the best performers as investors bet on a jump in consumer demand and industrial production. Banks fell 0.9% on stock price losses in Banco Sabadell, Santander and CaixaBank after Spain's competition watchdog opened an investigation into possible anti-competitive practices in the marketing of state-backed coronavirus loans. The benchmark Stoxx 600 index has now risen for 5 straight weeks, with a steady vaccination program expected to jumpstart regional economic growth. But recent rise in inflation has sparked concerns of sooner than expected tightening in global monetary policy. After dovish signals from the ECB, the Fed is expected to at least flag the pending start of talks about when and how to exit from policies put in place at the onset of the COVID-19 pandemic. The DAX in Germany lost 0.12%, while the MDAX index climbed 0.29% and the Tech DAX index fell 0.12%. CAC 40 in France rose 0.2% to hit a new 5-year high, while the SBF 120 index gained 0.17%. FTSE 100 in the UK rose 0.2%, even as data showed British inflation unexpectedly jumped above the Bank of England's 2.0% target in May and looked set to rise further as the country reopens its economy from lockdowns. Crude oil was up 0.06% to $72.17 per barrel. Brent was up 0.55% at $74.40 per barrel. Gold futures was down 0.81% at $1,841.60 per ounce. On the FX front, GBP/USD pair refreshed daily tops in reaction to mostly upbeat UK macro data, with bourse now awaiting a sustained move beyond the 141 mark. The pair built on the previous day's goodish rebound from the 140.35 region or 1-month lows and gained some positive traction through the first half of the trading action on Wednesday. A subdued US dollar demand was seen as a key factor that extended some support to the GBP/USD pair, which got an additional boost following the release of hotter than expected UK inflation figures. According to the data published by the UK Office for National Statistics, the headline UK CPI held steady at 0.6% month-on-month in May and accelerated 2.1% on a yearly basis from 1.5% year-on-year registered in the previous month. Excluding volatile food and energy items, the core CPI rose 2.0% year-on-year during the reported month versus consensus estimates for a reading of 1.5% and 1.3% recorded in April. Euro traded between 120.99 and 121.48 yesterday, slightly wider than the expectation range of 121 to 121.45, before closing little changed at 121.24. Momentum indicators are still mostly neutral, and Euro could continue to trade sideways. Expected range for the day today is 120.90 to 121.50. The dollar edged marginally lower in early European trade, but remained near a 1-month high as traders warily await the latest communications from the Fed following the recent jump in US inflation. The dollar index was less than 0.1% lower at 90.468, having hit a 1-month high of 90.677 on Tuesday. Dollar yen was largely unchanged at 110.06, near its 2-month high of 110.325, touched earlier this month. Aussie dollar was up 0.2% at 0.7698. The Federal Reserve concludes its latest 2-day policy meeting later today, although the 2-day meeting is expected to culminate in an unchanged decision on interest rates and monthly bond purchases. The backdrop of sharply rising inflation as the country's economy makes a solid recovery appears to be keeping traders on edge. The Fed is expected to leave policy unchanged and again play down taper talk. Nonetheless, markets will be looking for hints on whether the Fed is starting to acknowledge that inflation may not be as transitory as thought. Market consensus expects a tapering announcement in the next quarter.
This is today's market news. Thanks for listening. We'll see you next time.